Beginning with new listings or our supply numbers, we see more of what we've been seeing for the last 10 years, with just over 6,700 new listings coming in 16% lower than what we'd added to a supply last year, leaving us down over 20% for the year. So what's that mean for home buyers? Well, it means our housing inventory remains much too low, with fewer homes currently on the market than we've offered home buyers entering the summer months in all but one of the last 15 years in the St. Paul and Minneapolis real estate market. Additionally, if we look at what home buyers can expect for how long a home lasts before accepting an offer, we see that just for this year, that number has shrunk dramatically as median time on the market has dropped by more than 4 weeks from the beginning of 2023. So buyers need to be educated, get updated on new listings as soon as possible, and be ready to move if they are shopping in this market. Demand, meanwhile, similarly sees deep declines as both the affordability issue we discussed in the bubble crash video last month and the declining inventory pushes closed sales down 27% compared to last May and leaves closed sales down 26% year to date. So home sellers in this market remain in a strong position. However, it's important to note that this market is not quite as strong as previous years. Here we're looking at the median numbers of buyers coming through a listing before an offer is accepted. We see that 12 buyers is historically a strong number. However, if we compare it to the astronomical numbers we saw in 2021 and even last year prior to interest rate hike, we will find over 35% fewer buyers coming through our houses today. And that expectation of every home selling over list price should be tempered a bit as our median sales price comes in at 100% of our list price, meaning roughly half the homes sold in May sold for less than list price, down considerably from the last 2 years when the median price was more than 3% higher. So while it's not uncommon in today's market, sellers need to be aware that presenting and showing their home today requires a bit more professionalism than it has the last 2 years. Speaking of prices, we do see that the median sales price is down about $5,000 from a year ago, a trend worth watching, but it leaves us fairly flat year to date, and that decline in May is something we predicted in our 2023 prediction video. And finally, that crystal ball number of what homeowners can expect for future value of their property still tells us that at 1.8 months, we are still well below what's required even for a balanced market and far lower than the number that led to the Great Recession and the housing market collapse in 2008. So homeowners can expect their equity position to be stable and likely continue to increase, but that months of supply number is trending up, so it's worth keeping an eye on. And we promise to keep you updated every month, so subscribe now and we'll make sure you are the first to know what's real in our Twin Cities housing market.